The market's just staged one of the biggest turnarounds that we have seen in months. The S&P this week just gone has finished up 5.5% gain, and the FTSE 100 has extended its winning streak to 10 straight days of gains. We haven't seen 10 straight days of gains in over 8 years on the FTSE 100, and Trump just backed down from firing the Fed chair. But here's what everybody is missing. This crazy recovery has created some great opportunities in both the US and the UK stock markets. This is exactly what retail traders are going to overlook, and I'm going to break down exactly what these opportunities are. I'm Samuel Leach, and in the next 10 minutes I'm going to show you some of the most crucial information that you need to know that's going to affect your portfolio this week and how you can potentially profit from it. And also, don't forget, this week we have got the Fed meeting this Wednesday. This can completely change your outlook of your portfolio this week. So stay with me as I break down how I'm going to protect my portfolio against the Fed. So let's get started. Last Monday was crazy. The Dow has plunged over 1,000 points. We've seen this, absolutely nuts. And this is all sparked because Trump called Powell a loser, a major loser, and said that he should resign. There was fear around this about him having to potentially step down or actually Trump firing him. But here's the game changer. Trump backpedaled massively, sparking a huge recovery within all markets globally. And global policymakers took a deep breath, realizing that maybe the Fed's chair is safe for now with independence, at least until the next chairman gets in. The market's response has been dramatic. The S&P 500 exited correction territory. The tech-heavy Nasdaq jumped over 1.3%, showing that investors are maybe taking a breath and going back into growth stocks. Even more impressive, the FTSE 100 has had its best 10-day positive gains in 8 years. This hasn't been seen before. The FTSE 100 is being seen as the safe haven amongst these different stock markets. But here's what most analysts aren't telling you. This isn't just a relief rally. There are 3 specific opportunities that I'm going to disclose that could create opportunities this week for you and your portfolio, whether you're a day trader or a stock trader. Number 1, the political tension has been reduced, and now traders are focusing back on those economic numbers and figures, and we're seeing them come back into the market with confidence. Number 2, gold has had a pullback, but let's not forget it's still up 26.5% year to date. There is some opportunities here where how we can take advantage of that gold pullback. And number 3, Bank of England Governor Bailey just signaled a potential rate cut next month, increasing further opportunities there. So let's break down these 3 different points and what opportunities there are. These 3 factors create the perfect setup for the strategies that I'm just about to share in a minute. 2 major events will determine the market direction for this week. This is the first Federal Reserve meeting since Trump has backed down from calling Jeremy Powell a major loser and asking for him to resign. This is going to be an important meeting to watch, and we're going to be listening to every single word that he says, whether he actually brings up how he was scrutinized or not, and what he says specifically about the economy. The Fed is expected to keep rates at 4.5%, but the overall focus is going to be on the press conference and exactly what he says. Will he signal for potential rate cuts later this year or not? Everybody's going to be hanging on to every word that he says, and we're going to see heightened volatility around the markets, especially whilst he's talking. And more importantly, will he address the Trump scrutiny? Will he talk about what Trump has to say? Will he talk about the independence of the Fed? Or will he just carry on in his professional manner? Let's find out. Second, Friday brings the April jobs report. This is going to be one of the biggest economic data points of the month that all traders want to be focusing on. So will the labour market remain resilient, or will it be starting to show cracks? Have the tariffs affected the economy? All of this data is going to be coming out this week. Meanwhile, heading over to the UK, we've got the Bank of England, we've got Governor Bailey. He's hinted that we could be looking at interest rate cuts. Is this something that's going to happen? And the reason why he's signaling this is because we've seen inflation drop to 2.6% in March, and overall it looks like we're moving in that direction to have a rate cut. So how can we prepare our portfolio, our day trading, to take advantage of a potential rate cut? Stay tuned, I'm going to show you the exact strategy that you can use. So let's talk from a high level. Let's talk from a US point of view. we have got a potential recovery coming back into, I would say, growth stocks and tech stocks. So the first point of call is to look at Apple. Apple is a great stock to be looking at, especially for a rebound if you believe we're going to see good data this week. Apple's sitting on a large amount of cash. They are also very consistent in their profitability. And so let's not forget that Apple is still trading down 14% year to date. So if we anticipate a tech rebound, then Apple should be the first place that we're looking. Next, we've got Microsoft. It's not down as much as Apple year to date. It's down, I think, just below 7%. But their cloud business is doing very well. Their growth is still very strong. So I would also be looking at Microsoft on potential pullbacks to the upside. So these could be good opportunities to be able to buy these stocks at discount, especially from a day trading point of view. If you want just general exposure to the technology sector, then you could look at XLK ETF. This is a good ETF that will give you exposure to the overall tech sector. And again, if you're getting good pullbacks on that to maybe $195, then this could be good levels to be buying in if you're behind the momentum of a tech rally. Now, if we're heading over to the UK and we do believe that interest rates are going to get cut, which I do, I think it's highly likely, then we want to be looking at stocks that can benefit from that. So this is going to be banks, this is going to be financials, and this is going to be stuff like National Grid. National Grid will benefit from lower rates, so make sure you check out National Grid as an actual stock. They're rate sensitive, and if we see rate cuts, this will be very good for their stock. And if you think that we're going to get more volatility, which I think is going to happen, we've still got a large amount of time here for Trump to throw his toys out the pram, and overall I don't think every country is going to come to the table with these tariffs. So I think having the exposure to the UK markets, where the FTSE has been very resilient, is strong, but then also being in a defensive stock. So those are areas that I would be focused on, such as something like British American Tobacco. It's got a good strong dividend yield. It's not going to have too much exposure to these tariffs, and I think overall will be a relatively stable stock to perform well and get the uplift from the FTSE, as well as having good dividends as well. Or if you're looking at a simpler approach but you still want UK exposure, you could be looking at a ETF that basically has just high dividend yields within that ETF. So for a simpler approach, the iShares UK Dividend UCITS ETF, this provides exposure to high yielding UK stocks in a single investment. And what makes these UK opportunities particularly compelling right now is the combination of the FTSE's technical strength. We have had 10 consecutive days of buying. This is an important factor here. And then we also have the fundamental catalyst here of rate cuts as well, and how that can attract more people to the UK stock market. These sort of rare alignments don't happen for the UK, where you have the rate cuts. We don't have the exposure so much on the tariff front here. And we're also out of the US and China tit for tat. So there is a larger amount of focus on the UK stock market, especially with rate cuts coming as well. Let's talk gold. Gold has pulled back. It has hit an all-time high. It has been performing magnificently, as Trump would say, this year. It is up over 26.5% year to date. I think this is a good time to buy gold dips. You know, especially if you're day trading. Look at the hourly chart, look at the 15-minute chart, buying in those dips, targeting previous highs. On the oil front, prices have fallen significantly this year, also providing an opportunity. I think this is a sweet spot for oil around that $60 support level. We're seeing it bounce and hold that level. So I think when we start exploring this, where is a good opportunity to take advantage of oil prices, now is that time. I think if we're going to see an overall market recovery after these tariffs, you want to be looking at midterm and long-term positions, and where oil is priced now, this is a good opportunity. So stocks like ExxonMobil, they've got a dividend yield of 3.5%. They would obviously have felt the pain on their share price with the oil sell-off. But with oil prices picking up, we could see ExxonMobil get a good uplift, as well as getting a 3.5% dividend yield. Very similar play would be as well with Shell. So also have a look at Shell. Another play you could look at is also Chevron as well. So keep that one in there. So Friday's job report is going to be a huge insight into the health of the US economy. And it's very important that we understand how we position ourselves. If we see over 200,000 jobs, this is going to be very positive, and low unemployment. This supports economically sensitive sectors. Consider adding to financial stocks like Bank of America or industrial names like Caterpillar. If jobs disappoint, let's say under 150,000, This would support defensive sectors. Consider adding to utilities or consumer staples. These are going to be the ones that we look at, especially defensive, and this could really help with that gold position as well. So that jobs data is going to be absolutely crucial for your trading week. So if the Fed hold rates and rates don't cut, but we anticipate a rates cut coming from the UK, which looks likely with the inflation data, then we could see pound weakness against the US dollar. So short positions could come in for those that are day trading. Keep this in mind. This could be a very simple trade, but effective. All you're doing is you're trading the probability of the interest rate cut. It looks likely, and so if you can get a good position here on a potential early week pound against the dollar rally and look to potentially short this, you could end up with a nice profitable trade coming out the back end of the week. We're entering a pivotal week for markets with significantly reduced political risk, but two major economic events that could shift sentiment. The S&P 500 impressive recovery and the FTSE 100's remarkable winning streak suggest growing investor confidence, but we're not out of the woods yet. These strategies I've shared are designed to be straightforward and accessible for everybody, for beginners, for those that are advancing trading, and for those that have been following me throughout my entire time on YouTube. There are some very specific opportunities, and overall let's just highlight those opportunities again. We have got potential the tech sector rally happening this week. We have also got potential gold long trades and buying into the dip, potentially if Trump throws his toys out of the pram again. And then finally, we have also got the pound against the US dollar weakness coming in due to the Fed potentially holding their rates and the UK cutting their rates. I hope you've enjoyed this video, guys. Make sure we hit that like and subscribe button and get in the comments. I read them all. I'm keen to hear your feedback of how you found my outlook for the week. And also in the description, check out my free investment newsletter where you can catch my moves every single week in depth. Catch you in the next video, guys.